Now, let me now call on our second panelist, Mr. Yoon Song Shin from the BIS. Mr. Shin has an extensive experience in the academe, where he had previous appointments at Oxford University and the London School of Economics. Mr. Shin also served as senior advisor to South Korea's president, where he assumed a leading role in shaping Korea's financial stability policy and agenda for its G20 presidency. Ladies and gentlemen, let us hear from Mr. Shin.
Thank you, Governor. It's a great pleasure to join you and the other panelists in this very important session. I prepared a couple of slides, and let me bring it up for my presentation. I hope you can see these slides. I think my presentation follows on very nicely from the previous presentations by Laura Clapper, but especially what Dilip Aspi had to say about the payment system in India. And what I would like to do is to draw on some of the work that we did in a previous annual economic report special chapter on the role of central banks in supporting financial inclusion. And I'll give you one illustration of some of the principles through the experience of Brazil, which recently rolled out its own retail fast payment system. So the principle that we outlined in the annual economic report in 2020 was the importance of the central bank's role in providing an open architecture for the payment system, and how the rules of the game, which is part of that provision of the infrastructure provision, can also promote financial inclusion. So the idea is that when we think about the industrial organization of the payment system, the objective would be to transition from a proprietary network where the service provider becomes a gatekeeper on who joins and who then exercises market power as well as control over the data of the users. And the objective would be to move from a walled garden where that kind of market power is in place to more of a public square, an open market, which works according to rules which ensure a competitive level playing field. So this is a photo of the Basel town market, which sets up in front of the red building, which is the Basel town square. And Ellie, of course, knows this building very well. I'm sure this will be very familiar to Ellie. Now, the idea would be to pursue this analogy between the physical market square and the central bank's settlement accounts as a metaphorical market square. It's a public square in that it is an infrastructure that is provided by a public institution, and it's a public provision of a public good. Now, when the central bank provides its settlement account as a public square, there are two roles that this entails. So one is the physical provision of the infrastructure through the settlement accounts. And this is the metaphorical public space whereby within which the various payment service providers can operate and interact with both each other, but especially with the customers on the other side. And this is a market which would be characterized by quite a rich ecosystem of service providers, in that they would all have their particular niche or particular advantage. And the payment service that they provide would be part of a bundle of other services. But the crucial distinction between a walled garden and a setting like this would be that there are rules of the game that ensure that the network effects are designed to promote a virtuous circle of greater competition, better services, and greater entry, rather than a vicious circle, which entails greater market power, greater market concentration, and the ability to extract further data. So how would it do that? Oh, and before we move on, I mean, one important point would be that in India, NPCI is the infrastructure provider, but to the extent that NPCI is working very closely with the central bank, and the settlement takes place on the central bank's balance sheet, it is very much an extension of this same principle. So how would the rules of the game ensure that open architecture and the level competitive playing field? The crucial element here is data governance and the technical standards that give effective expression of data governance towards competition. So one aspect of this would be the rules regarding data control or data portability, whereby the control of personal data lies with the individual user. And what this means, among other things, is that the individual can give consent to other service providers for specific applications. For example, when an individual applies for credit. But of course, rules on data portability by themselves will not be sufficient to ensure an open and competitive architecture, because without the technical standards that ensure the effective expression of data in preserving competition, this will simply be a version of a data dump rather than a fully effective expression. The key word here, as Dilip mentioned earlier, is interoperability, which is to say the service offered by one service provider on the platform should be interoperable with the service provided by other service providers. And among other things, that means that you can make sure that there is a seamless connection between the services provided by the individual elements. And because of the interaction on the common platform, you would then be able to ensure competition. In the case of the payment system, one very good example of how you can ensure the open architecture and interoperability is the introduction of so-called application programming interfaces, or APIs, better known through its acronym APIs. What these APIs provide is a common technical standard for the exchange of information. Now, in particular, there are two APIs that are especially important in the payment system. One is the so-called account information service. And this is the API that allows individuals to open the app of one bank and check his or her balances across all the other banks and payment services providers in the same payment platform. The other API is this thing called the Payment Initiation Service API, where you can open the app of one bank and initiate a transaction from the account at another bank. So essentially, you have the ability to authenticate transactions across all of your different accounts. And what this means is that immediately you break down the possible fragmentation of the payment system. Now, let me give you one example of a very interesting case, which is that of Brazil. Brazil rolled out an instant retail payment system called Pix in late 2020. So this is now barely 1 year old, just over 1 year old. But in this very short space of time, it has gained a tremendous momentum in terms of the gaining users. And to give you a sense, this chart shows you the number of transactions, but perhaps a better gauge would be to give you some numbers in terms of the users of this system. So Brazil's population is around 213 million. But as of the end of 2021, so just barely a year after the introduction of the system, Pix had gained 118.5 million users. And of that, 110 million are individual users, and this is basically 2/3 of the adult population in Brazil. And around 8.5 million of the companies in the Brazilian payment system, which is around 57%. And a remarkable number that I find very encouraging in this context is the fact that of these 110 million new Pix users, 50 million users had not made any digital payments in the year prior to the launch of Pix. So for these 50 million people, they have made a digital payment for the first time in their lives in the last year, which is a really quite a remarkable achievement. I think one of the really interesting developments in this context is the way that this public infrastructure, and by the way, the Pix system has all these open banking features such as AIS and PIS, and it also has the ability to make person-to-merchant payments, the P2B payments, person-to-business payments. And what that's meant is that if you compare the number of transactions on Pix compared to the total number of debit and credit card transactions, we see that in the year or so since the launch of Pix, it has really gained very rapidly on the total number of credit and debit card transactions. And it has already overtaken the number of transactions on prepaid cards. And what this means is that the previous somewhat oligopolistic system that was overseen by the commercial banks has faced this very rapid new entry and this impetus towards lower costs and greater inclusion. And Pix for person-to-person payments is free. It is provided free of charge to the individual. For the person-to-business payments, this is still subject to some fees on the part of the merchants. And we're actually in contact with the Central Bank of Brazil to find out the extent to which those fees have been reduced. If we look at the type of payments, the blue indicates the person-to-person payments. This is the bulk of the type of payment in the system. But the interesting segment is the segment in yellow, which is the person-to-business payments, including the payment to merchants. So I think if I conclude, what I would say is that as exactly as Dilip outlined in his presentation, the role of the central bank and the public authorities more generally in providing the infrastructure for a very important public good can have a material impact on financial inclusion. And I think there is a very strong impetus if we look at this type of initiative and an extension, if you like, a continuum, where the end of which would lead to a central bank digital currency or a CBDC. Because after all, a CBDC is the logical conclusion of the public provision of a public good by the central bank. So let me conclude there, Governor.